Hey, welcome back everyone to the Real Money Pros. So glad you're with us today. Hey, it's still tax season. And maybe if you've been filing your taxes, you realize, oh my gosh, if I would have made contributions to a traditional IRA, I could have lowered my taxes this year. In tax season, all of this stuff is on the forefront of our minds. So we're gonna talk about doing contributions to a traditional IRA, a Roth IRA, and we're gonna end with the backdoor Roth contributions. Why would you make a contribution to a traditional IRA? Well, it's going to lower your taxes for the year you make that contribution. However, there are income limits for that contribution to be fully tax deductible. Why would you make a contribution to a Roth IRA? It doesn't lower your taxes for making a contribution into a Roth IRA, but that Roth IRA is going to grow tax-free for your retirement. So there's reasons why you would want to do a traditional IRA. There's reasons why you would want to do a Roth IRA. But what happens if you have the wonderful problem of making so much money that you can't put money into a Roth IRA and you can't get a deduction for a contribution to a traditional IRA? Let's go to the whiteboard, talk about those limits, and then we'll finish up with talking about the backdoor Roth IRA. For 2023, the most that you can put into a traditional IRA is gonna be $6,500 per person. Now, again, why would you wanna make a contribution to a traditional IRA this year? You get a tax deduction for your contributions. So if you make $100,000 and you put $6,500 into that traditional IRA, the IRS is gonna say, yeah, we're not looking at $100,000 of income. We're only looking at like $93,500 worth of income. That's what we mean by tax deduction. But here's the thing, there are income limits in order for you to get the full deduction. So what are these 2023 income limits? Well, if you're single, you gotta make under $73,000 this year in order to get the full $6,500 deduction. And it phases out pretty quick, right? If you make above that. Now here's where it gets really confusing. I love our simplified IRS rules. Maybe you're married and you have an employer plan, meaning you got a 401k, a 403b, a 457, something like that. If you're married and you have a qualified plan, then your household modified adjusted gross income has got to be under $116,000 in order for you to get a full deduction of $6,500 contributed to a traditional IRA. What if you're married, you don't have a plan, but your spouse has an employer plan? Well, then your modified adjusted gross income has to be under $218,000. What if you're married, neither one of you have any sort of employer retirement plan? Well, if that's the case, there's no income limit. You get the full $6,500 deduction for putting money into the traditional IRA. But let's face it, if you're single and you've got a great job, it's very possible that you're gonna be above $73,000 with your modified adjusted gross income for 2023. If you're married and you've got an employer plan or your spouse has a plan and you're both great income earners, man, it's quite possible you're gonna be higher than this in modified adjusted gross income. So now what do? Well, we're gonna talk about the backdoor Roth. But before we do that, let's talk about the income limits for your Roth IRA. Roth IRA, same deduction or same contribution amount. $6,500 is what you can put into a Roth IRA in 2023. Why you want to do a Roth IRA? Well, this is going to be tax-free in retirement. That's right. So maybe 20 years down the road, when you've been doing $6,500 a year for all these years, for 20 years, you've got a huge account now and it all comes out tax-free. So that's why you would want to do Roth. But same thing applies. There's income limits in 2023. If you're single and you make more than $138,000, you are not allowed to contribute the full $6,500 into a Roth IRA. If you're married filing jointly and your modified adjusted gross income is above $218,000, neither one of you can put $6,500 into a Roth IRA. So you've got this great problem. You make too much money. You make over $218,000 this year, you married couples, or you make over $73,000 or over $138,000, all you single filers. Number one, good on you. Way to get a job that pays you lots of money. Way to get rewarded for your hard work. But what are we going to do to create a tax-free source of retirement income for you Now's where we get into the backdoor Roths. The way that a backdoor Roth works is you make what's called a non-deductible, air quotes, non-deductible contribution to an IRA. So that means if you're single, you make over $73,000, well, you're underneath the threshold here, so you can go straight to an IRA, right? But let's say that you make above $138,000, so you can't go straight to a Roth IRA. Obviously, 138 is above 73. So what do? You make what's called a non-deductible IRA contribution, meaning you're not going to lower your taxes by $6,500 for putting money into a traditional IRA. But you're going to go ahead and put $6,500 into a traditional IRA. Then the very next day, you're either going to call your advisor or you're going to call your financial firm where you have this traditional IRA, and you tell them, hey, what I want to do is I want to reclassify that $6,500 contribution as a Roth contribution. It's got to go into the traditional IRA first. You don't get a deduction for it, and then you reclassify it as a Roth. And that's a way to get money from this column over to this column so that you have a source of tax-free retirement income. And you can do that if you're married. Let's say you're married and you're both covered under employer plans, whatever, and you can't make a deductible contribution to your IRA. You make over $218,000, so you can't make direct contributions to the Roth IRA. You would each make a non-deductible IRA contribution. You put $6,500 into that IRA, and then the very next day, you talk to your advisor, or you talk to your custodian where you've opened up that account and say, hey, I want to reclassify that as a Roth IRA contribution, and they will move it from this column to that column. That is what the backdoor Roth is all about, and it's a very achievable way for even high income earners to start creating tax-free growth for retirement. So there you have it. We talked about contribution limits to your traditional IRA, to your Roth IRA. We talked about how you would do a backdoor Roth contribution if you're high income earners and you can't get a deduction for your traditional IRA contributions. If you've got questions, go to our website, therealmoneypros.com, click on the Ask the Experts feature. I'll help you get it all sorted out.